In the past 2 weeks, there was quite some silent trading today, nothing particularly exciting. The volumes, though, were significantly higher, and that, of course, keeps fluctuating as the days go by. But joining us now to take us through exactly what's been going down at the NSE is Eric Masau, an independent analyst from Nairobi. Thanks for joining us. Eric, take us through the market activity today. Despite the fact that it has been relatively flat, there has been some activity. Perhaps you can take us through that.
Yeah, we saw last week was quite active as the quarter came to an end, so fund managers were in the market. So from yesterday we saw volumes reducing quite substantially. Today we saw volumes improving. The large market caps, Equity Bank, Safaricom and Co Bank to a certain extent were the main movers. And we've seen them move on they haven't been moving in terms of prices, they haven't been moving up or down substantially. So very little movement, and so the index was basically flat.
And of course, everybody's watching Kenya Commercial Bank just after their rights issue. What's happening there today?
The rights started trading last week. They've been coming off slightly as we see prices coming, as we see more volumes of rights coming through. They also came down today, and we're seeing more supply coming through. But that does not mean that the issue will not be oversubscribed. I think there's a lot of impetus and supply in the market in terms of liquidity to see that, that oversubscription coming through. The threshold is 50%, but I think they're going to attain it quite substantially above that.
Now, earlier today, Safaricom had a press conference an investor briefing where they talked about the second tranche of their 12 billion shilling bond. They expect to raise this anytime between September and November, with the interest rates coming low as we have seen them in the past couple of months. How do you see this impacting that particular bond?
If you look at their first tranche, they borrowed at a coupon rate of about 11.25%. And if you look at the, like the 10-year government bond, it's now trading at close to around 6%. And so just from that perspective, it makes a lot of sense for any corporate to really come back to the market at this point. And you see Safaricom coming back just to ensure that it can reduce its cost of funding. And I think that's its main objective.
Now, still staying with Safaricom, Les Bailey also talked about a change in shareholder profiles, which is something that could positively impact the company. Now, when we speak with the regular, shareholders, the retail ones, who are the bigger ones? So they say, well, the biggest problem with Safaricom is that there's too many retail shareholders. But today, Safaricom says the shareholder profile is beginning to change, and they're beginning to see the corporates coming in quite strongly as the retailers begin to sell just above the IPO price. How do you explain what's happening there, and how does this work for the positive, ways for that particular stock?
I think as a long-term counter, Safaricom is well positioned, and despite competition and regulatory pressure, we think Safaricom is still quite a good name. And looking at that, we're seeing institutions actually coming through into the counter, both local and foreign investors. The retail investors, some of them making a profit, and some of those who bought at below 4 shillings and also around 5 shillings, we are seeing some of them exiting. And that's why you're seeing this shift in terms of the balance of shareholders. But obviously, we'll see that continuing going forward, and we'll see a much more institutional profile in the stock going forward, obviously because of the institutions are much more keenly positioned in the large cap stocks.
Now, some of the larger internationals have valued the Safaricom stock at about 6 shillings, 40 cents, Renaissance, 6 shillings and 30 cents. And Safaricom says they see this share touching that particular level in a couple of months, say about between 6 to 9 months. Do you share in that opinion, and what are you telling investors about Safaricom right now?
I mean, there are all these risks, but I think sometimes they might be a little bit exaggerated. But obviously, if you look at the data in particular, I think in voice, they probably face challenges with the new entrants. But in data, they have quite a bit of competitive advantage. And also, if you look at M-Pesa services, we expect the ARPUs to keep on increasing on that as well. And in data, because the competitors haven't set up a proper infrastructure to really effectively compete with Safaricom, we expect them to be able to compete significantly well, over the next 1 year. So the ARPUs, we expect that to increase. So from that point of view, we expect good performance from the stock.
Okay, very quickly, away from Safaricom into another stock that has been described as cheap, though medium term by other analysts, and that's the Athi River Mining. Do you share in that view? And as they get on to their 12.5 billion expansion plan, how do you see this impacting the company going forward?
Yeah, obviously this capacity expansion in Tanzania, that has been very key for them, and we've seen actually the price going up on the back of that. When complete, it'd probably be one of the single largest producer of cement in East Africa. And so from that point of view, it's quite positive. Obviously, it's leveraged, so you have to see what they're going to do at that point. They might want to list the Tanzanian subsidiary just to reduce the level of debt. But from an operational standpoint, it's been a very good strategy, and that market is very attractive.